Something significant is happening with Social Security, and if you or someone you love depends on a monthly check from the SSA, this is not the moment to look away. The Social Security Administration has just announced a series of changes that are already making their way through the system, and depending on your situation, these updates could directly affect the amount that lands in your account each month. Now, not everyone will feel this the same way. Some pensioners may see adjustments to their payment schedules. Others could be looking at changes tied to cost of living calculations, eligibility thresholds, or how benefits are processed going forward. The details matter here, and understanding exactly what is shifting, and why, is the difference between being caught off guard and being fully prepared. What we are going to do in this video is walk through each of these changes calmly and clearly, so that by the time you finish watching, you will know precisely where you stand and what, if anything, you may need to do next. No confusion. No panic. Just the information you need, explained in a way that actually makes sense. So if you want to protect your benefits and stay ahead of what is coming, stay with us through the entire video. And if you find this helpful, and we believe you will, go ahead and give this video a like. It truly helps more people like you find this information when they need it most. Let us start with the foundation, because before we can talk about what is changing, it helps to understand how Social Security works and why these kinds of updates happen in the first place. The Social Security Administration, commonly known as the SSA, is a federal agency responsible for managing and distributing benefits to tens of millions of Americans every single month. These benefits include retirement income, disability payments, and survivor benefits, and for a large portion of the population, particularly retirees and pensioners, that monthly check is not just a supplement. It is the primary source of income that keeps households running, bills paid, and lives stable. The SSA does not operate in isolation. It works within a broader economic and legislative framework, which means that when prices rise, when Congress passes new legislation, or when administrative processes are updated, the Social Security system responds. That is not a flaw in the system. That is actually how it was designed, to adapt over time so that benefits remain relevant and sustainable. But what it also means is that beneficiaries need to stay informed, because changes, even well-intentioned ones, can create real uncertainty if you do not know what to expect. So let us talk about what is actually happening right now and why this particular round of updates is drawing so much attention from pensioners and retirees across the country. One of the most significant elements of the current SSA update involves the cost of living adjustment, which most people know simply as COLA. Every year, the SSA evaluates inflation data, specifically the Consumer Price Index for urban wage earners and clerical workers, known as the CPIW, and uses that data to calculate whether benefits need to be adjusted to keep pace with the cost of living. This is an automatic process, built directly into Social Security law, and it has been in place for decades. The idea is straightforward: if the cost of everyday goods and services goes up, your benefit should go up too, so that your purchasing power does not quietly erode over time. Now, COLA adjustments are announced in October each year and go into effect in January. What makes this current cycle notable is the broader economic environment in which it is taking place. Inflation has been a persistent topic of conversation for Americans across all income levels, and for pensioners on fixed incomes, even modest increases in grocery prices, utility bills, or healthcare costs can have an outsized impact. When your income does not flex with your expenses, every dollar matters more. So when the SSA announces a COLA figure, it is not just a statistic. For millions of retirees, it is a signal about whether their financial stability is being maintained or quietly diminished. The specific percentage applied in the most recent adjustment reflects the inflation data gathered over the previous year. While this number may seem small on its own, perhaps a few percentage points, when applied to your existing monthly benefit, it produces a concrete dollar increase that compounds over time. For example, if your current monthly benefit is around $1,500 and a 3% COLA is applied, that translates to an additional $45 per month, or $540 over the course of a full year. That is not nothing. That is a utility bill. That is a month of groceries. That is real money for real people living on fixed incomes. However, and this is where many pensioners run into confusion, the COLA increase does not always result in a proportional increase to what actually hits your bank account. There is another factor that must be taken into account, and that is Medicare Part B premiums. For most Social Security recipients who are also enrolled in Medicare, the Part B premium, which covers outpatient medical services, is automatically deducted from the monthly Social Security benefit before the payment is sent. This is known as the Medicare hold harmless provision, and what it means in practical terms is that if the Medicare Part B premium increases in the same year as a COLA adjustment, some or all of your COLA increase may be offset by that premium increase. This is one of the most common sources of frustration among retirees, and it is entirely understandable. You hear that your Social Security benefit is going up, you feel a moment of relief, and then your deposit arrives and the number does not look as different as you expected. That is not a mistake. That is the Medicare deduction doing what it is designed to do. It is important to understand this relationship so that you are not caught off guard when your January statement arrives. The SSA does send out annual notices, typically in December, that outline your updated benefit amount and your Medicare premium deduction side by side, so you can see exactly how these two figures interact. Beyond the COLA adjustment, there are also updates happening around the earnings limits that apply to people who are receiving Social Security benefits while still working. This is a topic that affects a specific but significant group of pensioners, those who have claimed Social Security early or are in the process of transitioning from work to full retirement. If you are under your full retirement age and you are earning income from work while collecting Social Security, there is a limit to how much you can earn before your benefit is temporarily reduced. This is called the Retirement Earnings Test, and the thresholds that define it are adjusted annually. For the current year, the SSA has updated these earnings limits to reflect wage growth across the economy. What this means practically is that you can now earn slightly more from work before your benefit is affected. This is genuinely good news for people in that in-between phase, still working part-time, still contributing, but also drawing on Social Security to supplement their income. The key thing to understand is that any benefit reduction applied due to the earnings test is not lost permanently. Once you reach your full retirement age, the SSA recalculates your benefit to account for the months in which it was reduced, and your ongoing payment is adjusted upward accordingly. It is a temporary withholding, not a permanent penalty. Full retirement age is itself a concept worth spending a moment on, because there is still a great deal of confusion around it. For people born between 1943 and 1954, the full retirement age is 66. For those born in 1960 or later, it is 67. For people born between 1955 and 1959, it falls somewhere in between, increasing by 2 months per birth year. Knowing your full retirement age matters because it affects how your benefit is calculated, when the earnings test no longer applies, and how much you stand to gain or lose depending on when you choose to claim. If you claim Social Security before your full retirement age, as early as age 62, your monthly benefit is permanently reduced. The reduction is approximately 0.5% for each month before full retirement age, up to 36 months, and 0.5% for each additional month beyond that. On the other hand, if you delay claiming past your full retirement age, your benefit increases by 8% for each additional year you wait, up until age 70. After 70, there is no further increase from delaying, so there is no financial reason to wait beyond that point. Understanding this framework is essential because it directly shapes the decisions you make about when to claim and how much income you can expect. Now, shifting to another important dimension of this SSA update, the changes being made to the Supplemental Security Income Program, or SSI. SSI is a separate program from standard Social Security retirement benefits, though both are administered by the SSA. SSI provides monthly payments to people with limited income and resources who are either aged 65 or older, blind, or disabled. This program serves some of the most financially vulnerable members of the population, and updates to SSI eligibility rules and payment amounts can have profound consequences for those who depend on it. The federal benefit rate for SSI is also adjusted annually based on COLA, just like standard Social Security benefits. What has drawn additional attention in recent months is a broader conversation at the federal level about modernizing the SSI program itself, specifically around the asset limits that determine eligibility. Currently, the asset limit for an individual SSI recipient is $2,000, and for a couple it is $3,000. These limits have not been meaningfully updated since 1989, which means they have not kept pace with inflation, housing costs, or the everyday financial realities that low-income Americans face today. While no legislative changes to these limits have been finalized at the time of this video, there is ongoing discussion in Washington about raising them, and viewers who rely on SSI should stay attentive to any announcements from the SSA as this conversation develops. There is also a set of updates worth addressing around Social Security payment schedules, because this is an area where misunderstanding can cause real anxiety, particularly for people who are budgeting carefully and relying on their payments arriving on a predictable date. The SSA distributes benefits on a staggered schedule based on date of birth. If you were born on the 1st through the 10th of any month, your payment typically arrives on the 2nd Wednesday of the month. If you were born between the 11th and the 20th, it arrives on the 3rd Wednesday. And if you were born on the 21st through the 31st, payment arrives on the 4th Wednesday. Those who have been receiving Social Security since before May 1997, as well as SSI recipients, follow a slightly different schedule, with payments typically arriving on the 3rd of each month. When holidays fall during a payment week, payments may arrive a day or two earlier than usual. The SSA publishes a payment schedule each year on its official website at ssa.gov, and that is always the most reliable place to confirm your expected payment date. If your payment is late, the SSA recommends waiting 3 additional business days before contacting them, as processing delays can occasionally occur without any indication of a broader problem. It is also worth addressing something that has become an unfortunately common issue, and that is fraud and scams targeting Social Security recipients. As these benefit updates make headlines, scammers see an opportunity. They may call, email, or send letters claiming that your Social Security number has been suspended, that your benefits are at risk, or that you need to verify your personal information to continue receiving payments. These are scams. The SSA will never call you and threaten to suspend your Social Security number. They will never demand immediate payment via gift card, wire transfer, or cryptocurrency. If you receive a communication like this, do not respond to it, and report it directly to the SSA Office of the Inspector General at oig.ssa.gov. For those who need to update their information with the SSA, whether that is a change of address, a new bank account for direct deposit, or an update to your personal details, the preferred method is to do so through your personal My Social Security account, which you can create or access at ssa.gov. This online portal gives you a secure, direct connection to your account information and eliminates the need to call or visit an office for many routine updates. The SSA has been actively improving its online services in recent years, and for most people, the My Social Security portal is the fastest and safest way to manage their benefits. For pensioners who are approaching retirement age and trying to plan ahead, now is an excellent time to review your Social Security earnings record. Your benefits are calculated based on your highest 35 years of earnings, so it is important to make sure the SSA's records accurately reflect your work history. If there are errors or gaps in your record, they can be corrected, but it is much easier to resolve them before you file for benefits than after. Your earnings record is available through your My Social Security account, and the SSA recommends reviewing it at least once a year. It is also worth knowing that if you are already receiving benefits and you believe there has been an error in your payment amount, you have the right to request a review. This is called an appeal, and the SSA has a formal process for handling benefit disputes. You can request a reconsideration, and if that does not resolve the issue, you can escalate to a hearing before an administrative law judge. Most benefit questions and concerns never reach that level, but it is reassuring to know that the system includes protections for recipients who believe something has gone wrong. As we draw toward the close of this part of the video, it is worth stepping back and acknowledging something important. The Social Security system, for all its complexity, exists for a reason. It was built to provide a measure of financial dignity to people who have worked and contributed throughout their lives, and to ensure that aging does not automatically mean financial hardship. The updates and adjustments we have discussed today are part of an ongoing process to keep that system functioning as intended. They are not reasons for alarm. They are part of how the program responds to a changing world. What matters most for you as a beneficiary or soon-to-be beneficiary is that you stay informed, that you verify information directly through official SSA channels, and that you do not let confusion or anxiety keep you from accessing the benefits you have earned. Knowledge is genuinely protective here. The more you understand how the system works, the better positioned you are to make decisions that serve your financial well-being. If you found the information in this video useful, and we genuinely hope you did, we want to make sure you never miss an update. New changes to Social Security, SSI, Medicare, and related programs are announced regularly, and staying ahead of them takes consistent attention. That is exactly what this channel is here for. Go ahead and hit that subscribe button right now, and make sure you turn on notifications so that every time a confirmed update comes through, you are among the first to know. Your financial security is worth staying informed about, and we will be here every step of the way to help you do exactly that.